What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to be taking a look at Ethereum. So, with crypto breaking out towards the upside, very similar to what we did with Coinbase and Bitcoin, let's take a look at the longer term picture first. So, last week we talked about how the 200 weekly moving average in red was serving as a basing structure to catapult Ethereum towards the upside. And Ethereum so far has followed through. Ethereum has broken above a bullish descending channel pattern and a bullish ascending triangle pattern with a price target at $4,600, which I think is just the beginning. Now, taking a look at the Elliott wave count, very similar to Bitcoin, Ethereum is putting in wave 5 in cycle degree. There are two methods to measure the target of a wave 5. The first method is by taking a 0.618 to 0.786 trend-based fib extension, which lands Ethereum anywhere between $11,000 and $22,000. The second way to measure the target of a wave 5 is by taking a 1.618 Fibonacci retracement of wave 4, which lands Ethereum at $14,000. So anywhere between the white shaded region that spans between $11,000 and $22,000 is our bull market projections for Ethereum. Now, taking a look at the short term, last week we talked about the targets for Ethereum should Ethereum push higher, and those targets spanned anywhere between $2,200 and $2,500. So far, those targets have been hit. Ethereum is currently trading in Fibonacci resistance as well as pitchfork resistance. Our short-term price targets for Bitcoin and the Bitcoin against S&P 500 valuation have also been hit as well. Like I said in the last Bitcoin video, when we believe an imminent correction is coming, we'll let you guys know. Now, let's take a look at some indicators, specifically the RSI and the Volatility Expansion Index. The weekly RSI is very close to hitting the overbought territory with a weekly RSI reading at 68. There is no bearish divergence on the weekly time frame, as both price and the RSI both formed a higher high. I just want to reiterate the point that just because the weekly RSI is in the overbought region doesn't mean that we should sell everything. Take a look at what happened in the last bull market. If you sold your Ethereum as the weekly RSI went into the overbought territory, you would have sold the majority of your Ethereum at $300. And then Ethereum proceeded to go all the way to $4,800. So just remember that it's common for the weekly RSI to be in the overbought region in a bull market. Now, taking a look at the Volatility Expansion Index, I said in the last video that I wasn't going to sell any Ethereum until we got a high volatility reading. We haven't seen that yet. The current volatility reading on Ethereum is at 33%. So like I said before, the Volatility Expansion Index is an oscillator that will rotate between periods of low volatility and periods of high volatility. Even with Ethereum rising to $2,200, the weekly Volatility Expansion Index hasn't moved much. And as price continues to push higher, so will volatility. This is why time and time again, we keep saying that cryptocurrencies are on the verge of a substantial bull market. And I think most people got a taste of that Sunday night. As stated before, we believe that this is just the beginning. In my opinion, we haven't seen peak FOMO nor peak volatility. So shifting gears to the Ethereum against Bitcoin valuation, I thought this week I would take a different perspective for this chart because even the best crypto YouTube channels that are still bearish still have this perception that crypto will crash because the Ethereum against Bitcoin valuation is still on a downtrend. Just a heads up, the Ethereum against Bitcoin valuation is in light blue and Bitcoin is in orange. Now, most people believe that there is a positive correlation between the Ethereum against Bitcoin valuation and Bitcoin. That's false. Even though there was a positive correlation between the Ethereum against Bitcoin valuation and the price of Bitcoin in the last bull market, as you can see, starting in June of 2022, which is the blue vertical line, the price of Bitcoin and the Ethereum against Bitcoin valuation started to diverge, where Bitcoin made a new bear market low, but the Ethereum against Bitcoin valuation almost made a new high. Now, take a look at what happened so far in 2023. Bitcoin has almost tripled off of its bear market low, and the Ethereum against Bitcoin valuation still remains in a depressed level. So just to reiterate, there is no 100% positive correlation between the price of Bitcoin and the Ethereum against Bitcoin valuation. So if this is your bear case that crypto is going to crash, it's a very flawed bear case. So closing things off with some regression, just a quick overview. The red region represents Ethereum's overvaluation. The green region represents Ethereum's undervaluation. And the white region represents Ethereum's despair region. As we spoke about plenty of times, any time that Ethereum enters its despair region is a once in a lifetime buying opportunity, because every time that Ethereum has left its despair region, Ethereum has always proceeded to fly towards new all time highs. And it's called a despair region for a reason, because nobody is buying in the despair region besides the market makers. That's unfortunately just how human psychology works. So the undervalued region of the regression bands this week span between $2,171.50 to $3,746.70. So even with Ethereum today at $2,200, you still have the opportunity to purchase Ethereum in its undervalued region. I can't say the same for Bitcoin, but yes, Ethereum is technically still undervalued, especially if you consider our long-term bull market projections at $14,000. So that's the analysis on Ethereum. Now let's talk about crypto in general. So just as of last month, the amount of money flowing into money market funds have hit a new all-time high at $5.7 trillion. I'm always a believer of actions speaking louder than words. I don't care how bullish crypto is on social media. I don't give a crap about that. I care about people's actions. What is the herd doing? Well, the herd is staying in cash. Most retail investors are scared because Jack Ma sold his Alibaba shares, Jamie Dimon sold his JP Morgan shares for the first time, Moody downgraded the United States credit rating outlook. Most people are scared. Most people are putting their cash in high yield savings account and money market funds. And so far in 2023, cash has been the worst performing asset class. You made a 5% return in cash. Bitcoin and Ethereum are both up over 100% year to date. Gold is up over 10% year to date. In fact, gold just made a historical new all-time high just a few hours ago. And the S&P 500 is up over 20% this year. Numbers don't lie, ladies and gentlemen. Just food for thought. But can you imagine how high Bitcoin and Ethereum are going to go when most people realize that the Fed is done hiking rates and that $5.7 trillion starts to leave money market funds and re-enter the stock market and the cryptocurrency markets? Can you imagine how high we're going to go? Okay, so that's my analysis on Ethereum for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.